So, good morning, students. Today I am discussing about the last chapter emerging trends in accounting. What is digital transformation of accounting? So, digital accounting refers to formation, representation, and transmission of financial data in an electronic format. What is digital transformation of accounting? First, what we know digital accounting. Digital accounting refers to the formation, representation, and transmission of the financial data into electronic format. So, digital accounting is all about saving time, space, and money. No more waiting weeks for data. Having access to more timely, accurate, accurate financial information provides owners and decision makers with a competitive advantages. So, what are the advantages of digital transformation of accounting? The first one is a streamlined system. Recording the information or managing the books will be easy and gathering information will be very fast. The second advantage is accessibility to important financial information. So departments are interlinked together with each department helping the other department. This is one of the key reasons why companies outperform others. Third one is easy of use and improved speed and productivity. The easy of use is one of the core aims of changes in technology, providing users with convenience and comfort. The accounting software applications are easy to use in comparison to the manual methods. The primary purpose of recording all accounting data is to the first one is keep a record of all the transactions on a monthly or yearly basis. And second one is to analyze the data and the number of accumulated to make business decision. Increased data security. With digital accounting, one can now back up data and secure it safely in a server. Obtaining the information in cloud system will enable to retrieve data even if things go wrong. Next one is cost effectiveness. Another advantages. Using digital data is more cost effective other than forms of recording data. It works faster and it saves business time so they can concentrate on different parts of the organization. And last one is reliability and scalability. Human error is very normal. When a person is responsible for compiling data, to prevent the human error from damaging the facts and figures of your accounting system, business often hire another person to ensure that a mistake does not go unnoticed. And next one is disadvantages of digital transformation of accounting. What are the disadvantages we are obtaining? The first one is heavy cost of installation. So computer hardware needs replacement and software needs to be updated from time to time with the availability of new versions. The second one is cost of training. To ensure effective and efficient use of computerized system of accounting, newer version of hardware and software are to be introduced. This requires special training and hence cost is incurred to train the staff personnel. And third one is fear of unemployment. On account of the introduction of computerized accounting system, the employees feel insecure that they may lose employment and show less interest in computer related work. Another one is disruption of work. When computerized system is introduced, the existing process of accounting and other works are interpreted. This results in certain changes in the working environment. Another disadvantage is system failure. The danger of system crashing due to some failure in hardware can lead to subsequent interruption of work. This is more when no backup is made. Another one is time consuming. When there is system failure, an alternative arrangement needs to be made to avoid loss of work. This consumes some time to bring the regular process back. Another disadvantage is unanticipated errors not known. Unlike human beings, computers do not have capability to judge or detect unanticipated errors in the system. And last, breaches of security. The danger of virus and hacking into the system from outside creates a strong need for security of the system. Similarly, the person who has created the specific program can easily defraud by tampering with the original records. The next one is big data analytics in accounting. What is big data? Big data is a collection of data that is huge in volume yet growing exponentially with time. It is a data with so large size and complexity that none of traditional data management tools can be store it or process it effectively. So big data is also data but with huge size. What is the definition of big data? Big data can be defined as extremely large sets of unstructured data coming in various forms of gathered from different sources at a rate so fast that it is way behind the processing power of traditional server. What are the examples of big data? Big data is a term used to describe a collection of data that is huge in size and it growing exponentially with time. Big data analytics example include stock exchanges, social media sites, jet engines. So big data is all about complexity and speed and therefore after characterized by four V's. One is volume, represent large volume of data. Velocity, represent high velocity of data flow. Variety, represents wide variety of data, especially in an unstructured and or semi-structured from such an images and text. variability. So this refers to inconsistency which can be shown by the data at times, thus hampering the process of being able to handle and manage the data effectively. So, what are the advantages of data analytics in accounts? The first one is monitoring and improving business performance is the first advantages. Every industry must regularly evaluate their business performance if they want to stay profitable. So, accounting data analytics can help to ensure that the company is running smoothly, goals are being met, and performance is being maintained or improved. So, this knowledge is critical for a company's long term viability and survival. The second one is improving the client experience. So, data analytics in accounting can be used to improve client experience by examining parameters such as the turnover of tax returns, the time is taken. So, second one is this can help the company is to bring new clients and improve the client retention rate. Retention rate is one of the important business metrics that refers to the percentage of clients retained by the company over a given period of time. Third one is identifying and managing risk. Risk can originate from a multitude of sources both inside and outside the company. Anyone in accounting department of a company must know how to deal with the risk. So data analytics in accounting can help in analyzing the area of risk that are faced by the company and use predictive analytics to make business decisions around specific risk, generating higher profits margin. Data analytics in accounting can be used to uncover the behavioral patterns of your customers. These patterns can aid business in developing analytical models, which can then be used to discover investment opportunities and improve profit margins. Therefore, accounting data analytics also help in generating higher profit margins. Another one is cash flow analysis, that is in another advantages. Data analytics in accounting can also assist in tracking your cash flow and identifying places where a company can reduce losses or invest profits more wisely. Next, reading the disadvantages of data analytics in accounting. What are those? Inaccurate data. Manual data entry is the major key cause of inaccurate data. Inaccurate data may lead to serious consequences and may also influence the decisions. However, acquiring centralized system with a validation of check can be used to eliminate these issues. The second disadvantage is lack of support. For accounting data analytics, organizational support is must. Every employee plays an important role in the data analytics process. It is very difficult to generate any actionable information if they do not submit data for analysis. Therefore, there should be proper coordination among the teams. And last one, lack of expertise. Due to lack of expertise, several firms struggle with analysis. Employees may lack the skills or knowledge to conduct in-depth data analysis. However, these challenges can be mitigated by emphasizing analytical ability during the hiring process. The next heading, accounting through cloud computing. What is cloud accounting? Cloud accounting software is similar to traditional self-install accounting software. Only the accounting software is hosted on remote server. Similar, the SaaS software as a service business model. Data is sent into the cloud where it is processed and returned to the users. What are the advantages of the cloud accounting? The first one is mobile access at any time. This is one of the first advantages. With cloud accounting, one can access his accounts and key financial figures at any time from anywhere. If there is Wi-Fi or an internet connection, one can always check the status of his business. Second one is cost and time effective solution. So working online reduces IT cost and saves time by keeping constantly connected to the business. Online accounting is carried out entirely from the cloud. There is no costly IT infrastructure for its maintenance. Watertight security and no time consuming backups. When accounts are cloud based, then the accounts and records are all saved and backed up with military levels of encryption. On cloud platform, backups and software's updates become a thing of the past. The software updates automatically with latest functions. What is the tax rates and necessary returns? So this saves both time and money. The fourth one is share and collaborate with easy. Working with colleagues and sharing data with advisors, it is an extremely straightforward process when you are based in the cloud. Colleagues, management team and advisor can all access the same numbers instantly from any geographical location. So collaboration is always easy. And fifth advantages, reduces paperwork and is more sustainable. Using cloud computing can deliver the dream of having a paperless office. With an online accounting system, one can significantly reduce the reliance on paperwork. Invoices can be emailed out directly to clients, removing the cost of printing and postage and speeding up the payment process. Incoming bills and receipts can be scanned and saved directly to the associate transaction in our accounting software. And sixth advantages is better control of financial processes. The efficiency of Xerox online accounting software gives you greatly improved control of your core financial processes. And seventh one is 24/7 access. A big advantages of for many clients in the always on availability of their financial information. So important indicators are often displayed on a dashboard that you don't even have to go looking for them. And real time information. Another big advantages is the real time information is available. What are the disadvantages of cloud computing? The first one is internet, broadband speed. Cloud based accounting requires a good internet connection, otherwise, low speeds would impact efficiency. The second disadvantage is data security. This is extremely important, so you need to be confident that your provider adheres to high standards. In addition, you need strong discipline around things like controlling access so that when staff leave, for example, their logins to your system are removed. Vendor lock. Some clients worry about this in case they may need to switch an alternative solution provider in future. And last disadvantage, lack of customization. This is usually more of a concern for large organizations with legacy systems. The next heading, accounting with drones. Entrepreneurial accountants are creating drones as an audit services. Drones may save money for accounting clients who can use them for stock takes, mapping, safety monitoring, and to inspect bridges and buildings. In the accounting profession, for example, first firms working with clients that own large mineral deposits, mining operations can now use drones to fly over the area, taking thousands of pictures and measurements. Accountants can use that data to provide exact estimates of holdings. So, what are the advantages? It saves accounting time. It also saves cost of accounting and auditing work. It is also useful where it is difficult for an accountant to visit physically. Drone can help us dangerous task. These are the advantages. What are the demerits? It saves high cost of installation. Drones may be risk for general public. Drones may pose a danger of aircrafts. Lack of regulation regarding drones can cause problems. Drones may not be allowed in certain areas. The next one is forensic accounting. What is forensic accounting? Was not formally defined until the 1940s. Originally, Frank Wilson is credited with the birth of forensic accounting in the 1930s. When Wilson was working as a CPA for the US Internal Revenue Service, he was assigned to investigate the transaction of the infamous gangster Al Capone. Capone was known for his involvement in illegal activities, including violent crimes. However, it was Capone's federal income tax fraud that was discovered by the forensic accountants. What is the meaning of forensic accounting? Forensic accounting utilize accounting, auditing, and investigate skills to conduct an examination into the finances of an individual or business. So, what are the definition of forensic accounting? It is frequently used in fraud and embezzlement cases to explain the nature of financial crime in a court. So, forensic accountants are experienced auditors, accounts, and investigators of legal and financial documents that are hired to look into possible suspicious of fraudulent activity within a company or hired by a company who may just want to prevent fraudulent activities from occurring. They also provide services in areas such as accounting, software, damages analysis, valuation, and general consulting. So, what are the activities of forensic active accountants? Task performed, information needs, forensic investigation, financial statements, bank statements, credit statements, education. These are the activities for forensic accountant maintained. Next, Planet Creative Accounting. What is creative accounting? Creative accounting consists accounting practices that follow required laws and regulation but deviate from what those standards intended to accomplish. Creative auditing capitalize on loopholes in the accounting standards to falsely portray a better image of the company. So, a primary benefit of public accounting statements is that they allow investors to compare the financial health of competing companies. When firm in creating accounting, they often distort the value of the information of their financial provides. So creative accountants was always find bizarre and novel ways to tweak figures to company advantage. Their goal is to make a firm look as a successful and profitable as possible, and sometimes they will go about doing this by twisting the truth. If a gray area in accounting is found, it may be exploited, even if it results in a misleading investors. So, what are the types of creative accounting? The first one is overestimating revenues, lowering depreciation charges, delaying expenses, masking contingent liabilities, undervaluing pension liabilities, and inventory manipulations. Next one is outsourced accounting. What is outsourced accounting? Outsourced accounting ensures you have effective internal controls by providing a system of checks and balances to help you reduce internal fraud opportunities. It can be cost profitable to have enough staff to segregate. What is outsourcing? Outsourcing is the business practice of hiring a party outside a company to perform services or create goods that were traditionally performed in house by the company's own employees and staff. So, outsourcing is a practice usually undertaken by companies at cost cutting measure. What are the challenges of outsourcing? Slower turnover time and lack of business knowledge, language and cultural barriers, time zone differences, lack of control. What are the types of outsourcing? Professional outsourcing, IT outsourcing, manufacturing outsourcing, project outsourcing. What are the strategies? Address communication issues, build a virtual office, grow your team horizontally, considered agency, considered NS cross, outsourcing conclusion. Okay.